Okay. Welcome to Deloitte's Debriefs tax webcast series in Asia Pacific. Our webcast today is from our Geography Updates series and is entitled Regional Incentive Policies in China, New Growth Opportunities. My name is Lili Ji, and I'm a counsel of Deloitte Legal based in our Beijing office. I have the pleasure of hosting today's webcast. I have three speakers with me today, Feifei Li, Eric Lin, and Jeff Xu. Feifei is a tax partner based in Deloitte China, Shenzhen office. Eric is a tax partner based in Deloitte China, Hainan office. And Jeff is a tax partner based in Deloitte China, Shanghai office. You may access our bios on the left side of the screen. Before I introduce the agenda for today's webcast, I'd like to take a moment to highlight some of the features of our webcast console. First, all users are on listen-only mode. If you have any content-related questions, you can submit at any time in the Q&A box at the bottom right of the screen. We'll do our best to respond to your questions during the presentation. Second, all PC users can maximize or minimize each box at your convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download today's slides and related publications, please go to the Downloads and Links box. On the other hand, mobile device users can view the slides and answer the survey on screen. Thirdly, if you require attendance record for this event, you can download your CPE certificate by clicking the Request CPE icon at the bottom of the webcast console. Now, let me give you an overview of the topics we will discuss today. First is the individual income tax subsidy policy in the Greater Bay Area. Second is the Hainan Free Trade Port tax policies. The third one is Beijing Two Zones policies. And the fourth one is Shanghai Lingang policies. And then will be the question and answers section. Okay, the first topic in today's agenda is individual income tax subsidy policy in the Greater Bay Area. And Feifei will take us through this topic. Feifei, please.
Okay, thanks, Lily. And it's my pleasure to be here today to share with you the individual income tax subsidy policy in the Greater Bay Area. You may be aware that the Ministry of Finance and the State Taxation Administration announced in March 2019 the introduction of an IT subsidy for qualified talent working in 9 cities of Greater Bay Area, including Guangzhou and Shenzhen, etc. And the most important thing is that this subsidy is exempt from PRC RIT and is directly returned back to the individual's personal bank account in China. There are 2 key points for this preferential policy: who could apply this subsidy and how much could be applied. So, who could apply? A qualified individual is a foreign person, including Hong Kong, Macau, Taiwan residents, and is considered as a high-end talent or urgently needed talent working in the Greater Bay Area. The determination of the talent are made by each of 9 cities. The local governments have some discretion in designing and aligning the subsidy policy with local demand. And how much could be applied? The general principle is that the subsidy is offered to align the amount of the tax that the individual could have paid as if they worked in Hong Kong. That means subsidy will help lower the effective IT rate to a flat rate of 15% on eligible income sourced in Mainland China for qualified individuals. The policy is effective from January 2019 to December 2023. So the first year application for 2019 subsidy has already completed. And the approved talents has received the subsidy by end of last year. Today we will give you a brief introduction on IT subsidy policy in Greater Bay Area, including the practice and our suggestion in the following slides. Next slide, please. Okay, so now let's look at the calculation method of the subsidy. According to the local rules issued by each 9 cities, generally, IIT subsidy amount is calculated using the IIT actually paid on eligible income for the year, less the benchmark IIT. And the benchmark IIT is calculated based on 15% of qualified individuals' annual taxable income. Actually, 15% is the standard tax rate of Hong Kong salaries tax. Using this simple subsidy calculation method will make the assessment process easier. Okay, let's call it method 1. In Shenzhen, from this year, individual can elect the calculation benchmark IIT based on the actual amount of Hong Kong income tax that the individual would pay in Hong Kong. Let's call it as the method 2. For some of the individuals, the Hong Kong tax rate on their actual employment income may lower than 15%, so it will be more beneficial for them to adopt method 2 than method 1. However, the calculation for method 2 is more complicated than method 1, and the professional knowledge on Hong Kong salary tax would be required to calculate the benchmark IIT correctly. In this case, it will be a challenge for many individuals. Are all individual incomes included in such IIT subsidy? Well, in fact, only 3 types of income are eligible. There are comprehensive income, income from business operation, subsidies obtained from talent projects of the government. Usually, application is accepted once a year after the completion of the annual tax reconciliation of that tax year. For example, the IIT subsidy for 2020 will be applied in the middle of 2021. Open window will be slightly different in each city. According to the practice last year, the application procedure usually starts from July to August of next year. We estimated the IIT subsidy from different income levels based on method 1. You can see from the estimation that for the case where gross comprehensive income is 500,000, the tax saving due to IIT subsidy is around 16%. And for the case where gross comprehensive income is 3 million, the tax saving percentage increased to 61%, which is a significant amount. So we think the subsidy is really big incentive to qualified talents working in Great Bay Area. Next slide, please. As I mentioned just now, each of 9 cities has published their rules respectively, and the requirements may vary. We will provide further details and highlight the special requirements in the next 2 slides. Here we summarize the key points of the qualification for the policy. Please note that overseas talent need to meet all of fundamental requirements and one of additional requirements. First of all, let's look at the fundamental requirements. The individual must be a foreign citizen, including Hong Kong, Macau, Taiwan resident, or a resident of Hong Kong under the admission scheme for talent, or a Chinese citizen that studies or lives abroad and has a long-term residence permit in another country. Other general standards include terms such as the compliance of the IIT. The individual must work in that city for at least 90 days. But in Foshan, Zhongshan, and Dongguan, there is no 90 days requirements currently. Finally, the individual must abide by all laws, ethics, and act with integrity. In addition, Shenzhen has a requirement that the annual taxable income must be more than RMB 500,000. Next slide, please. Additional requirements will be whether the individual is a high-end talent or an urgently needed talent. Please refer to the right side of the slide for the qualification requirements. In addition, some special standard of additional requirements are in place as well. For example, Guangzhou accepted talent green card holders as a high-end talent. Category B work permit holders are accepted as a high-end talent in Shenzhen, Zhaoqing, and Foshan, and urgently needed talent in Zhongshan and Zhuhai. In Guangzhou, urgently needed talent annual taxable income should be more than RMB 300,000. Next slide, please. We assist many companies for the Great Bay Area IT subsidy applications, and we have listed out some practical issues based on our experience in last year and what actions need to be considered for these issues. For the first question, indeed, we have seen many cases that the person holds a work permit, but application failed due to other unqualified conditions. For example, non-compliant IT filings, or the A work permit issued by non-GBA cities is not recognized as a qualified talent. And for the individual who does not meet the requirements currently, some individuals or companies may just give up the application. But in fact, we assist some companies to analyze the eligibility of the individual and succeed to find a solution to help the individual to obtain a recognized talent qualification and apply the subsidy successfully. So, if the company can conduct assessment to the employees, analyze the possible solution, and assist the individual to do the application, we think it will increase the success rate of the subsidy application, and also would be highly appreciated by the employees, and it's also good for the company to retain the employees. Also, companies may consider to transfer its qualified talent that work in another area into the Great Bay Area in order to enjoy the subsidy. We suggest the company to evaluate the transfer of talent from various perspectives, not only from IT, but also from corporate tax perspective, corporate company operation perspective, in order to avoid unexpected issues raised up due to the transfer. Last but not least, no matter whether the company will assist the subsidy application or not, it is important to communicate with the employee in advance to prevent any misunderstanding, especially for those whose IT were borne by the employer. The company may consider whether the IT subsidy should be returned to the company, and how can the subsidy can be returned from the personal bank account. In such cases, the company may consider to set up internal policy to define the obligation and the rights of the company and the individuals respectively. That's all I have today for the GBA subsidy policy. If there is any questions or concern about the policy, just let us know, and we are more than willing to discuss into further details. Okay, thank you. Over to you, Lily.
Thank you, Feifei, for the sharing. That brings us to the first polling question of the day. The question is, did your company assist an employee or employee individually apply for GBA IIT subsidy? And your options are, yes, applied and all applications succeeded. Yes, applied but some applications failed. No, we are not aware of the GBA IIT subsidy policy. No, still under consideration. No, as there is no eligible employee for the application. And don't know, not applicable. Okay, while we are waiting for the results to come in, I have a question for Feifei. Hi, Feifei. According to your experience, what are the main factors the companies or the employee concern for the GBA IIT subsidy policy?
According to our experience and questionnaires on our GBA-IT subsidy, most companies or employees concerned about three key factors of GBA-IT subsidy policy. The first one will be how long the policy takes effective and whether the application requirement would change every year, because it may have impact on the company and the employee's decision on the job relocation to GBA. The second one is the eligibility of the employee for the subsidy. The companies or the employee usually concerned about whether the qualification criteria are hard to meet and how many individuals are eligible for application. The third one is the application pass rate, whether the pass rate is high or not. Except for the above three factors, there are also other factors such as to what extent the individual and the company can benefit from this policy from financial reward or incentives perspective, and the company administration and the communication cost on the GBA-IT subsidy application, etc.
Okay, thanks, Fei. Now let's see the result of our polling question 1. It seems that most of our audience are not aware of this GBA-IT policy, and the second option selected most is no, as there is no eligible employee for the application. I think if you haven't made use of the GBA-IT policy, you may consider reaching out to Fei for help. Hainan Free Trade Port has been a hot topic ever since its announcement in the middle of 2020. It offers investors and businesses a unique opportunity during economic downturn. People are keen to know how Hainan Free Trade Port can create value to their business as well as to individuals. Next, Eric will introduce the tax opportunities offered by Hainan Free Trade Port. Eric.
Thanks, Lily, for your introduction. Hello, everyone. This is Eric Lin, partner of Deloitte Hainan office. As Lily just mentioned, Hainan provides a unique opportunity during this economic downturn for both multinationals and domestic companies. So in the next 10 minutes, I will focus on the tax opportunities offered by Hainan Free Trade Port and share with you a few recent cases we have helped our clients to create value by transforming their business structure with these new elements. First of all, the framework of Hainan Free Trade Port policy can be summarized as 6+1+4. 6 refers to the liberalization and facilitation on 6 areas, including trade, investment, capital flows, cross-border, movement of people, movement of logistics or transport, and secure and orderly flow of data. The one industrial system refers to the establishment of modern industry catered to Hainan's characteristics and advantages, including tourism, modern services, and high-tech industries. The 4 refers to the 4 system construction, that is, institutional arrangements in tax, in rule of law, in social governance, and risk prevention and control system. First of all, as a recap of Hainan tax policy, as you can see from the next page, there are 3 key terms, that is low tax rate, simplified tax system, and stringent tax administration, including the 15% EIT, 15% individual income tax, and 0% tariffs. So we will highlight these 3 important tax preferential rules for multinationals in the next few pages. First is enterprise income tax. As you can see from this page, there are 3 tests for the reduced rate from the statutory 25% to 15%, including the primary business activity should be an encouraged business as set forth in 2 national catalogs and 1 Hainan catalog. The revenue from such primary business activity should account for 60% or more of the company's gross revenue, and thirdly, it should carry out substantial business operations in Hainan. Second is the new foreign direct investment that is for domestic companies to make outbound investment. It provides a tax exemption for foreign source income to be remitted to Hainan. And thirdly, there is an accelerated deduction of certain capital expenditures, including fixed assets or intangible assets valued at RMB 5 million or less. There will be an immediate tax deduction. And for assets valued at more than that threshold, it will provide an accelerated depreciation or amortization schedule in Hainan. Next page, please. In terms of individual income tax, as Feifei just mentioned, Hainan provides a similar 15% effective tax rate for qualified talents working in Hainan. In addition, it's not limited to foreign nationals, but Chinese nationals will also qualify for this tax preferential treatment. Therefore, we sometimes say this measure is more favorable than most other tax rules currently implemented in other areas in mainland China. Next page, please. In terms of the tariff, there is a zero tariff for imported goods in 4 lists, including 1 negative list that is for production equipment to be imported by companies for their own use in Hainan, and 3 positive lists, that is ships, aircraft, vehicles, yachts, raw materials for production and processing trade in Hainan, and goods for consumption by Hainan residents. All these 1 negative list and 3 positive lists can enjoy zero tariff for the imports in Hainan. And another main feature for zero tariff is for qualified goods to be processed in Hainan if it has 30% or more value added and then further imported to other regions of China, the tariff can be still exempted. So in the next 3 pages, we will share with you a few cases of multinationals in terms of how we can leverage the tax opportunities in Hainan to transform our business and create value. The first case is a regional headquarters in China. Traditionally, we have seen multinationals setting up holding companies in Hong Kong or Singapore and then make investment in mainland China due to favorable tax arrangements or treaties. If we set up a regional headquarters in Hainan to provide business and management services to their affiliates in mainland China, such as administration and shared services, content tax and financing, IP licensing, etc., it would also qualify for 15% EIT rate for the profits generated in Hainan, which is substantially lower than those affiliates in mainland China unless they are high-tech enterprises. Therefore, we can have a Hainan regional headquarters working with the foreign parent company, working with their affiliates in mainland China, and in addition with the treasury center in Hong Kong or Singapore, and then we can also build up a cross-border tax-efficient structure as well as a cash pool facilitating inflows and outflows of renminbi and foreign exchanges between their group companies in and out of China. This is our first case for holding structure and financing structure. The second case shows a multinational established a global trading hub in Hainan to be engaged in foreign trade, imports and exports, as well as processing and manufacturing. As you can see, for imports and exports, the Hainan trading hub can qualify for EIT 15% plus local rebates with effective tax rate as low as 9 or 10%, which is comparable to Singapore Global Trader Program. And if the Hainan company imports raw materials for production, for processing, and re-imports to other provinces of mainland China, it would also qualify for the special rule of Hainan original production, as we just mentioned earlier. That is, the customs duty, the tariff can be exempted when they are imported into Hainan and then re-imported to other regions of China. So for the whole supply chain, the tariff will be fully exempted. Next page is the third case, which is a more comprehensive one in the digital area. As we traditionally talk about linear supply chain from procurement to manufacturing, delivery, and after-sales service. And now we are considering to transform the traditional business model to a digital supply network. So there will be digital R&D, dynamic manufacturing, intelligent supply, and smart service, both in and out of China. So where should we set up the principal company? That will be a problem. So if we have a Hainan principal operating company in this digital supply network, there will be tax benefits in terms of reduced income tax and local rebates, exempted or deferred tariffs, deferred import VAT, reduced individual income tax for all those employees in and out of China. And more importantly, as we build up this sufficient function and risk in Hainan, there will be a significant portion of profit margin from this whole digital supply network to be attracted to Hainan, and therefore the overall effective tax rate will be reduced. Well, as a closing remark of the Hainan tax planning considerations, having said all those features where we can reduce tax via a Hainan operation, we will recommend that our tax strategies are combined with transformation of your whole business structure and business model, with a focus on key elements such as value drivers, where is your people, where are your assets, what's the function and risk of this Hainan entity, how your income streams are flowed from Hainan and to Hainan, and what's your business structure, what's your business substance to be carried out in Hainan. Well, that's all of our introduction of Hainan tax policies. If you are interested in this area, we can have a further discussion later. Back to Lily.
Thanks, Eric, for the sharing. That brings us to the second polling question of the day. The question is, which of the following preferential policies would be the most attractive for a company to invest in Hainan? Choose up to 3 items. And the choices are A, tax incentives, B, support on corporate investment and financing, C, protection on intellectual property, D, financial subsidy based on operation contributions, E, talent support, F, don't know, not applicable. While we are waiting for the results to come in, I would like to ask Eric, since the announcement of the Hainan Free Trade Port Master Plan, Hainan Free Trade Port has been significantly changed. Could you please share with us the current status and progress of Hainan Free Trade Port? Eric?
Well, the significant progress has already been made since the initiative was announced in June 2020. First of all, in terms of the detailed rules of the master plan, we have seen a number of policies released during the past few months, including the national catalog of encouraged industries in Hainan, lists of zero tariff raw materials to be processed in Hainan and then for export, qualifications of talents eligible for 15% individual income tax, as well as QFLP rules have also been released. And we also learned from the statistics that more than 1,000 multinational companies, including a large number of big names of Fortune 500, have already registered subsidiaries in Hainan. And moreover, a number of key performance indicators such as GDP, imports and exports, infrastructure investments, etc., of the second half year of 2020 have exceeded those of the whole of 2019, and even with significant increase than the whole year. All these facts indicate that Hainan Free Trade policies are highly attractive to global investors despite all the COVID-19, and we believe the business environment and government efficiency will be further improved down the road. Lily.
Thank you, Eric. Now let's see the result of the polling question number 2. It seems that the most attractive factor of Hainan Free Trade Port is its tax incentives. But there are still some audience who are not aware of the Hainan Free Trade Port policies. Again, if you have any questions regarding investing in Hainan, please feel free to reach out to Eric. In the next section, I will take you through the new policies about Beijing Free Trade Zone and Beijing Service Trade Opening Up Comprehensive Demonstration Zone, which are commonly referred to as the 2 zones in practice. As you can see from these slides, both the Beijing Free Trade Zone and the new Beijing Service Trade Opening Up Comprehensive Demonstration Zone were announced by Chairman Xi in September 2020 in Beijing during the China International Fair for Trading Service. Beijing Free Trade Zone covers an area of around 120 square kilometers, and it is comprised of 3 functional zones, namely Technology Innovation Zone, International Business Service Zone, and High-end Industrial Zone. These 3 functional zones spread over 7 administrative districts in Beijing, including Chaoyang, Haidian, Tongzhou, Shunyi, Changping, Yizhuang, and Daxing. As for the Beijing STZ, the first set of Beijing Service Trade Opening Up policy was published in 2015. It has been upgraded 3 times thereafter. The 2020 version was referred to as the 4.0 version of Beijing Service Trade Opening Up policy, where the innovations have been upgraded. What are the differences and similarities of the Beijing Free Trade Zone and Beijing FTZ? Let's look at the comparison below. Both FTZ and STZ policies are formulated around the positioning of Beijing, particularly that Beijing is the technology innovation center, center of international exchanges, and culture center. But each of these 2 sets of policies have their own features as well. First, the Beijing Free Trade Zone policies are only available in the 3 designated functional zones, whereas the Beijing STZ policy technically covers the entire Beijing unless otherwise specified. The purpose of the Beijing Free Trade Zone is to parallel run certain new policies, which is aimed to be duplicated and expanded to other areas in the future. Therefore, the Beijing FTZ policies encourages innovations, including technology innovations and original innovations, as well as regulatory and supervisory innovations. On the other hand, the Beijing STZ policy has an emphasis on service industry, and it aims to explore new routes to further open up the service industry to an international standard and to promote investments into the service industry. From the industry perspective, the Beijing FTZ encourages high-end new technologies, pharmaceutical and healthcare, international finance, digital trade and digital economy, business service, as well as culture service and trade. On the other hand, the encouraged industries in the Beijing STZ have similarities with that in the Beijing FTZ, but it emphasizes more on the service industry. For example, technology service, financial service, business and culture service, and education and healthcare service. As for the preferential policies, the Beijing FTZ is mainly focused on policy innovations, while the Beijing STZ also introduces several tax incentives. Okay, in this slide, we can see some preferential tax policies in the 2 zones, which include high tax status approved upon filing for R&D and production enterprises engaged in integrated circuits, artificial intelligence, biomedicine, and key materials, subject to satisfying certain conditions. Such conditions include minimum operation period of 1 year, R&D expenses within China no less than 50%, etc. Tax incentives for technology transfer. for enterprises registered within Zhongguancun Innovation Pilot Demonstration Zone, annual technology transfer income not exceeding RMB 20 million is exempted from enterprise income tax. For the portion of annual technology transfer income exceeding RMB 20 million, 50% of the enterprise income tax will be exempted. Qualified technology includes patents, computer software copyright, exclusive right of integrated circuit design layout, new plant varieties, new varieties of biomedicine, and other qualified technologies. In order to encourage the formation of venture capital fund in the form of a company, for a venture capital enterprise in the form of a company registered within Zhongguancun Innovation Pilot Demonstration Zone. If the transfer income of equity with a holding period of over 3 years accounts for more than 50% of the annual equity transfer income, 50% enterprise income tax will be exempted in proportion to the individual shareholding in the venture capital enterprise. If the transfer income of equity with a holding period of over 5 years accounts for more than 50% of the annual equity transfer income, 100% enterprise income tax will be exempted in proportion to the individual shareholding in the venture capital enterprise. And qualified foreign high-end talents may also benefit from individual income tax preferential treatments. However, detailed rules for this have not been issued yet. In addition to the tax preferential treatments introduced above, most of Beijing's two zones policy are focusing on regulatory innovation and opening up, including further opening up of the financial sector and promoting the free movement of capital and talents. Due to time constraints, I will not go into details of these policy innovations this time. As the two zones policy was issued only recently, there have not been much detailed implementation rules. However, any innovation proposals by companies based on actual business needs are highly welcomed by the relevant government authorities in Beijing. Beijing FTZ is one of the youngest free trade zones in China. In comparison, Shanghai has China's first free trade zone. In 2019, Lingang new areas of Shanghai free trade zone was established. Next, Jeff will tell us more about Lingang new area. Jeff, please.
Lily, thank you. Let me start my presentation by giving you an overview of Lingang new area of China-Shanghai pilot free trade zone. This is part of the the entire free trade zone program. I would say Lingang is very, very unique and it's different from many areas of a free trade zone in China in the following ways. First, this area is the largest area of all the free trade zones in China. The planned construction area for this Lingang free trade zone is 873 kilometers. In the map, you can see this very square pink, light pink area on the map, close to the sea. This is the total construction area. The a little bit dark pink area, again, along the coast of sea. This is a phase one construction area, which will reach 119.5 square kilometers. So you will say the size of this whole area is very, very unique as compared to all areas of a free trade zones in Shanghai. Secondly, this free trade zone has its own strategic task assigned by the central government to Shanghai. Based on the information made available in the public, the strategic task for Lingang is to connect China to the world at a much advanced level and to show the world that China's door is and will be opened wider and wider. So this is another area to demonstrate to the world, and China is going to be very determined to be integrated to the world system. Thirdly, Lingang area, as compared to Beijing and also Hainan, as Eric mentioned, it has its own industry system, naming 7 plus 5 plus 4. 7 refers to 4 pillar industries, i.e. integrated circuits, artificial intelligence, biopharma, and aviation and aerospace, plus internet driving, advanced equipment manufacturing, green remanufacturing, and etc. 5 refers to modern service industries, new type international trade, cross-border finance, modern shipping, information service, and technology service. 4 refers to 4 new types of business platforms, a headquarter economy, offshore economy, artificial economy, and a blue economy. Now, with this, industry system in the pipeline, in the plan, and the goal of Lingang area is to reach GDP of RMB 1 trillion by 2035. In terms of a business environment, again, Lingang area is given the task to create a business environment with limited or no restrictions on business, i.e. so-called freedom, many freedoms, free investment, free flow of funds, free movement of people, free trade, free transportation, easy flow of data and information with connection to the world. So you can see this is a very different area. It has a different area as compared to other area of a free trade zone, and it has a unique strategic position, and also it has a very much industry focused area. You can see all those industries are industries highly encouraged by the central government, by China's different departments. And those are the strategic industries or areas China must compete with world players. Now, I would say, Lingang is not an area which offers extremely attractive tax incentives or subsidies, but there are some. Let me go through some of the key tax incentives available in Lingang. You may find this is not as easy to obtain as you can obtain in Hainan, particularly in Hainan. First, the individual enterprise income tax. We also in Lingang they also offer 15% EIT incentive for 5 years, but it's restricted to the projects in those 4 pillar industries, and it has a manufacturing facilities. It has to have a technology R&D activities, and of course, the investor of those projects needs to be relatively well known, world class. So all those factors need to be considered by the local tax authority and the government of Lingang in order to assess whether your project is qualify for 15%. So this is not that attractive. If you can qualify for all those factors, you may also qualify for high tech status, which will give you 15% anyway. And also the 15% rate will start from the first year when the company is established. For example, the company may incur loss for 2 years, then you may only enjoy 15% for the next 3 years. So overall, even there's a 15% rate available, but I don't think it's going to be very attractive, and I don't think you're going to make a decision based on this particular 15% income tax rate, because it's just only available for 5 years only. And the VAT incentive, again, is very limited. There's 2 areas. One area is, say, for any vessels sold to companies registering Lingang, and also the vessels are registered in Xiaoyangshan port, which is, again, part of Lingang new area, and will be treated as an export for VAT purpose. So the shipping building companies can apply for export VAT refund. And also the VAT exemption scope may be for services, service exports may be expanded a little further, and I think the implementation rules are going to be issued later on. So based on those two, 15% income tax rate and VAT, I don't think it's that much, attractive, and I don't think the company will make all the business decisions, based on those incentives. Let me talk about individual income tax rate. Again, there is a 15% tax rate as well, but I think the mechanism for enjoying the 15% rate is totally different from the mechanism, for this preferential individual income tax rate in Hainan, and a little similar to the mechanism of the individual income tax rate incentive in Greater Bay Area. So in Lingang, there are income tax rate, personal income tax break for foreign expatriates and the local Chinese employees. For foreign expatriates working in Lingang, and the Lingang basically says, they are going to offer your effective income tax rate to be 15%. So you have to, or you need to pay individual income tax according to Chinese individual income tax laws regulations, and the local government, i.e. Lingang government, is going to offer you the subsidy in order to reduce your income tax burden to effective rate of 15%. So those 15% is only applicable for foreign expatriates working in Lingang. So it's not that easy to obtain the 15% unless you really work there. And in terms of how many days you have to spend, you have to actually physically working in Lingang. It's not specified. It's not clearly made public in terms of how this 15% rate is going to be achieved. I think it's all case by case discussion. I think based on my discussion with the local government officials, I think so far they are relatively flexible, and they don't have a very fixed rules in terms of number of days you have to stay and work in Lingang. For Chinese nationals, the 15% rate may not be entirely applicable to Chinese nationals. So there will be some, personal income tax rebate, i.e. subsidy, to get your income tax rate relatively lower, but not as significantly as lower to 15%. So you may get the 10%, 15% of the IIT you paid back from the government in form of a subsidy. So, but I think the overall tax burden may not be lower to 15%. There will be some for Chinese nationals, but not as good as that for expatriates. So in terms of the tax incentives, those are the three ones, 15% income tax rate and 15% personal income tax rate and some VAT break. But, based on those three tax incentives, I don't think Lingang is the one, which should be known to our taxpayers for low tax jurisdiction as compared to Hainan and the Greater Bay Area in terms of personal income tax. Now, in addition to tax incentives, Lingang does offer various subsidy schemes and programs. So in many locations, the local government do offer subsidy schemes on case-by-case basis. Some of the subsidies are published. Some of the subsidies are all subject to case-by-case negotiation discussions. Now, Lingang does publish, its subsidy schemes for, those four pillar industries, as I mentioned at the beginning of my presentation. As of today, Lingang government already published subsidy schemes for two industries, artificial intelligence and biopharma. On this page, I list out various support subsidies at all stages or at all supply chain of the industry. So basically, they are going to offer subsidy based on your investment size. Okay. For example, for certain biopharma, artificial intelligence, they may offer 10% to 30% of your capex. Obviously, of course, the capex will be defined later by the government in the detailed implementation regulation. Usually, it will cover all the equipment and the construction of manufacturing facility. Land purchase is excluded. So if you are in this type of investment, and this is one type of subsidy the local government may offer to you. Second type of subsidy will be based on specific business activities. For example, if you do R&D activities, they may offer 10 to 30% of the subsidy based on your R&D qualified R&D expenses to encourage you to spend money on the R&D activities, again, in Lingang. The third type of subsidy will be based on your tax contribution, which is very, very common seen in many locations across China. The fourth type of subsidy is related to talent acquisition and personal income tax subsidy, as I mentioned. This is all in the subsidy. Also, they may provide low-cost housing to Chinese nationals, and even they will provide subsidy for you to Chinese nationals on a limited basis when you actually purchase any housing in Lingang area. So we will expect to see the similar subsidy schemes to be published for integrated circuits industry, civil aviation, and aerospace industry later on. And in addition to those four pillar industries, I also mentioned there are RHQ, economy, and cross-border financing. So Lingang is going to basically will follow their own schedule to release subsidy schemes for other industries and other particular business activities such as RHQ. Because Shanghai have been attracting many companies to set up their RHQ. China RHQ, Asia Pacific level RHQ, Lingang is also wants to be a location which is attractive enough to many multinational companies to upgrade their existing facilities or existing companies or set up a new RHQ, China level RHQ, and Asia Pacific RHQ in Lingang as well. So you will see there are many subsidy programs, schemes to be published by the Lingang government. Now, in addition to those published subsidy programs and schemes, now for unique and large projects, particularly those projects were invested by Fortune 500 companies, there are chance for you to initiate a case-by-case negotiation, I would say, discussion with the top leaders of Lingang. So they are willing to basically consider your case and create a unique subsidy programs, schemes just tailored for your project. For example, Tesla, everyone knows Tesla set up their manufacturing plant in Lingang. And I think, for Tesla project, there are many unique features of the entire subsidy schemes and programs, which is not, available in the published subsidy programs. So I think, there is a chance, that, you can elevate your case to the top leaders and to ask for a unique, tailor-made subsidy program to support your project. As long as your project is big enough and also fit into the those 4 pillar industries. For example, I'm currently representing 2 companies. One is in IC companies, semiconductor industries, and another one is in hydrogen, battery industry. So I met with the executive deputy director of a Lingang administrative committee several times, and Lingang did pay a lot of attention and came up with a very attractive, tailor-made subsidy schemes and a program for our 2 projects. So in conclusion, I would say Lingang is very different from others. It has its own strategic positioning task, and it's more focused on building up a very much pro-business business environment to support its envisioned industry systems, focus on 7+5 and 4. And it doesn't, really offer attractive tax incentives, but it does offer quite attractive, competitive subsidy schemes and programs. Yeah, that's the end of my presentation. Back to you, Lily.
Thank you, Jeff. Now we are having our 3rd polling question for today. The question is, what is the status of your investment plan in Lingang area? And the options are already invested in Lingang area, considering investing in Lingang area in the future, not considering investing in Lingang area in the future, don't know, not applicable. While we are waiting for the result to come out, Jeff, let me ask you a question. What key factors does a company need to evaluate in a decision of whether to locate some business in Lingang?
Lily, thank you for asking this question. And I think have been discussing this topic with many multinational, particularly multinational companies in the past couple of months. I would say the first factor and the most important factor is your strategic consideration for your supply chain. Restructuring or location for your supply chain. And then I think unless it really makes sense from business perspective to locate your business in Lingang, because that's part of Shanghai. Also, it's part of a Yangtze Delta, and it has opportunity to really try something new, and which is not allowed outside of the Lingang new area. Basically, if you have something you can't do, you want to do but you can't do outside the free trade zone, outside Lingang area free trade zone, you may talk to Lingang to see if they can basically remove those restrictions and create a business environment for you to carry out your business. So strategic factor is the number one. Secondly, whether or not your people is willing to move to physically move to and work in Lingang, because it's relatively further away from downtown area. It will take 1 hour and a half. But I think in the next couple of years, the Shanghai municipal government, Lingang government will made a lot of efforts to create a lot of expressways, build more expressways to connect with downtown with many different short expressway to get the travel time be less and less. And thirdly, of course, the subsidy will play some important role in the whole decision, because nowadays, every company is looking for all kinds of support from the government. Subsidy is a key topic. I think Lingang, does have a strong financial strength to really honor its commitment in terms of financial subsidy and some subsidy support and subsidy programs. So those are the 3 factors I think every company needs to evaluate based on in terms of whether or not they should move or create some business to be located in Lingang.
Okay. Thank you, Jeff. We now have the results of our polling question. It seems that most of our audience are not aware of the Lingang policies, or the investment in Lingang is not applicable to them. So you may consider reaching out to Jeff for further details about investing in Lingang new area. Thanks, Fei, Eric, and Jeff. This brings us to the end of our today's discussion. We now have some time to respond to some questions from our audience. This one is for Fei. In case an individual left China or ceased his/her employment in China, would he/she still be eligible for applying the GBA subsidy?
The answer is yes. Yes, Lily. The answer is yes. The application is reviewed based on the status of the year the individual applied for the subsidy. For example, the eligible individual ceased the China employment and left China in May 2021, but he or she still can apply for the RIT subsidy from January to May 2020 when the application window opened in 2022. However, the individual should maintain active the bank account in China until he or she receives the subsidy. From company side, if the company bears the China tax for the individual and would like the subsidy to be returned to the company must communicate with the individual before his or her movement in advance in this regard. Also, the internal policy and legal documentation between the company and the individual in respect to the GBA IT subsidy may be necessary. Lily. As for the question from Agnes, yes, from Agnes, I will call you soon after the webcast.
Okay, thank you, Fei. That unfortunately is all we have time for. Fei, Eric, and Jeff, thank you, and special thanks to all of you who were able to join us. We would like to encourage you to fill out the short survey that will pop up on your screen momentarily and tell us what you think about today's program. If you join us late, please know that this presentation will be archived for future viewing. If you feel that others would benefit from this webcast, please share the webcast via the share this icon or have them visit the debrief website. We will respond to all the questions submitted during the webcast in a couple of weeks. Also, if you think of any other questions or comments later, please feel free to reach out to either me or our speakers. We'd be more than happy to talk to you. And please don't forget to tune in to our next scheduled webcast from the Global Mobility, Talent and Rewards series on 11th March, entitled Looking Ahead, Key Trends on Tax and Immigration Impacting Talent Mobility in Asia Pacific. At last, from all of us at Deloitte, thank you for your participation in Deloitte's Asia Pacific Tax webcast today. Goodbye.